Yeah. 2. Yeah. Aye. I'm jacking the beat, you calling the cops. The yapping is cheap, I call you the ops. The rapping is heating, it's all cause of pop. You get a leak for the ball, get a drop. Feel like I'm wrong when I double it back, cause I'm making it harder to catch that. But I covered the ticket, I call you to visit. You tipping and hit up the cash app. Baby girl, been around for it, yeah. In the old days, I was stuck in old ways. Never really trying to flip the old page. Young man tripping at an old age. Thinking I was flicking, had a low wage. Led the bro days, then a slow praise. Thinking it'd be different, it would gon' change. Then it really didn't, it's a cold game, yeah. Ay, all I really wanted was the money in the pocket. Got over money, but the money ain't the topic. Like Bill Doe and the money gotta stop it. Kid need food and the whip need juice. I'ma get these views when the
What's good, baby? It's your boy Dale. I'm back in the saddle again. Our motto is to buy, build. We already bought it already, so we already own it, free and clear. Refinance to long-term debt, cash flow. That is the motto. Cliff, man, is that a pretty strong motto, man? What do you think?
Man, the model is strong. Like, you're getting each piece of the invest, right?
What it do, baby? It's your partner looking oh so fresh, cold, clean. You see that thing on my bag, Cliff? They got us looking done. There we go. There we go. My bad. Take that damn picture for your mama and them. And welcome, guys, to another edition of Real Estate Friday Training, guys, where we look at real estate, man, see what's going down, man, and prescribe some solutions. Hey, Cliff, man, tell everybody what's going on with you, man. How was with me and talk to people, man? What's going down?
Yeah, it's a good week. A lot of stuff going on in the market. So, things are moving.
Yeah.
But you already know this game's always changing. It's always moving. So we just preparing for the next step.
Yes, sir, man. Now every week, now we got to ask the question, did we get the bag?
You already know.
You got the... Yes, sir. I got that bag, university, and I got my diploma too. We did get the bag. Yeah, you don't talk about it. But yeah, man. And I got that bag, university, guys. Your diploma is your check. Okay? The bag. That is the diploma. So each and every time you close a deal, whether it be a traditional business or real estate deal, show us your diploma, baby, with that check, y'all. But guys, man, welcome, guys. Let's get into this thing, guys. You know how we do it every single week. Let's dive into it. We're going to dive into the current market analysis, guys. We're going to revisit a couple things because what's going on is you actually have some stuff going on with the apartment complexes, guys. I'm sorry, not apartment, forgive me. New construction builders, how they're lowering their price point, guys. So we're going to be revisiting the conversation about interest rates, all right, with Patrick McDavid and his team. And then we're going to graduate over to the new construction of how the interest rates is actually affecting that market from a retail and investor standpoint. And then we're going to prescribe what's going on with the economy and some solutions, guys. So let's get into this thing real fast, Cliff. Let's just see what's going down, man. Here we go. Let's go, guys.
Fed rates interest rates to 22-year high, leaves door open for more. This is a Bloomberg story. So here we go. Federal Reserve raises interest rates from 5.25% to 5.5%, highest in 22 years. Looking ahead, we will continue to take a data-dependent approach in determining the extent of additional policy firming that may be appropriate, says Jerome Powell. Powell highlights encouraging signs of inflation curbing, but warns that policy has not been restrictive enough for long enough to have its full desired effect, indicating a possibility of further tightening. The FOMC upgrades economic growth to moderate from modest, while expressing concern over elevated inflation in service sector categories due to tight labor markets, and expects credit tightening to impact the economy following bank failures. Tom.
Wow. So we kind of saw it coming. Got another quarter point.
Listen.
The Fed rate now 5.5. It sits there 5.25, 5.5. There's only a tiny spread, which means it's just putting more pressure on everything. But what he said was very interesting. He said, remember, we've been waiting for the Fed to interpret figures. Well, and listen to what does the Fed say that he thinks it's a moderate problem or a modest problem, and we hang on the words of the Fed. When now he's saying it's going to be data dependent, and number one, he said, inflation rose by 3% through June, but that was only 1 month, and it was really like closer to 4.5%, and getting down to 2% is a long way to go.
It is.
And then he said, when we get together on September 19th and 20th, remember, this is the longer summer break for the Fed. We're going to be all the way September 19th and 20th before they get together again. And we're just sitting here 20th of July was just a week ago. So it's effectively almost 2 months.
Yeah.
And what he said was, I will have 2 more job reports and 2 more consumer price reports in hand by that gathering.
Okay.
So what he's saying now, basically, is the stock market is going to be able to predict and manage what the Fed says in September, because it's going to be a data-driven approach. So we don't have to wait for Jerome Powell to say, I feel this, or how we hang on his words, modest, moderate, major. What word did he use? Now he's saying it's going to be data. So we're going to look at those job reports and the consumer price reports.
So here's my question, Cliff. Why wasn't data from the get-go? Because now the Fed is saying it's not going to be data.
Right.
So what was it before? Am I tripping?
No, it's their words. They manipulate the market with their words.
So basically, you have people with titles, right? Basically dictating how the market actually goes, not based on any data initially. It was based on their word. Is that right?
Right. Yeah. What they say is what the law is.
Trash. Okay. Let's keep going. Let's keep going.
Reports. If the job report is too hot, if the consumer price index is too high, then he's probably coming with a 1/4 point on September. But the market, you're going to see the market react as soon as the reports come out, because it's going to tell the market what he's going to do, because he says we're going to data driven. And I think is a sign that things are getting better in the stability of the economy. He also said, I don't really see a recession this year. I think we've been able to surf this thing out a little bit, which means maybe everything the Fed did here, even though we had a lot of layoffs, people were looking for work, maybe we've gotten through this thing. And so I think...
what's a 30-year fix right now?
Listen to
30-year fix right now. So let's go to mortgages.
I want to say it's like 6.8%.
Rob, you have that? I sent you the link.
6.8?
Well, watch this. Well, what would you expect would happen overnight with the rate goes up a 1/4 point? You expect to be up a little bit.
Listen to
It was a link I sent you from Google
rate.
in your email. Anyway, so I just pulled Florida. 500,000, 20% down, state of Florida mortgage, credit score 680, 699.
Okay.
That is where the majority of America is, or just under. 30-year fix, 7.95.
What? 7.95, $500,000 mortgage.
What?
20% down.
Correct.
680 to 699, 7.95.
Correct. As of this morning, and you can see the little spike up right there that happened.
Stop right there. Stop right there. This is, I got to flex a little bit because there was a lot of conflicting information in there. And I like my dude, Tom. That's my dude. Him saying that the Fed is saying that it may have worked. I got to ask the question because as the scripture says, you would know them by their fruit. And I'm them talking about this damn economy. If what they're saying is right, Cliff, real quick, how do you explain the fruit of what's going on? 7.95% interest rate? Are we serious? Record layoffs? Are we serious right now? Inflation is still going up? Like we're not in a recession. Like where? They're making decisions based on not data initially, their emotions and feelings. Now it's data. So now we're supposed to believe that what they were saying before was tight, but what they were saying before was based on bullshit. Now it's based on data. Help me understand.
Because when they first started talking, right? When they first started presenting the information, they didn't know if it would work. They weren't sure with the direction they were going to go. So they were saying, we're going to do this and we're going to see what happens. And then we're going to continue to do that until we believe it's going to help in the end, right?
Yeah,
That's what the steps they took.
Yeah.
What's happening now when I see that 8% interest rate, right?
Mm-hmm.
It worked. The 8% interest rate is a sign that what they are trying to do worked.
Got a question, real fast.
Right. Hmm.
Again, we deal with facts on the show, data, not emotions. Okay.
nothing,
Um,
nothing but facts. You know what I'm saying?
if what you saying is correct, Congress should stop printing money, right?
You already know.
Yeah,
You already know.
I gotta say it again with my church time. That's some bullshit. Some bullshit. I'm smelling some bull right now. Because if what they're saying is correct, Congress should stop printing. Newsflash: the budget for President Biden is now going to be $7 trillion. The Inflation Reduction Act, which is really the Inflation Production Act, and the CHIP Act, really, which is really the non-CHIP Act, to be honest with you, is they have $1 trillion that has not been spent yet. It's chilling, parlaying in the cut like some chicken in the oven. Now what's happening is Biden is saying, now I want a budget at $7 trillion. I'm confused. If all this worked, why do you need to print some more money? Shouldn't the economy be taking care of this itself? Where am I off at?
All right. So basically, I think you're trying to say that the economy is good, but the economy ain't been good for 10, 20, 30 years. What they're saying
Uh-huh.
is we're going back to the messed up things we used to do.
Okay,
We've been printing money since 2008.
understood.
We're going back to that.
I'm rocking with you.
That's
I,
that's.
I I agree
Hmm.
with what you're saying, but and that's a fine balanced view. But when the administration and everybody else is saying that the economy is wrong, look at this. Look at the S&P 500, the Nasdaq, things of that nature. Look at it, it's up, which is really fake success because all it is the print money going into the market because that's the only way it can go because it's not going overseas no more. So they can't inflate it, inflate it away no more. What's up?
But that is success now. We
Oh,
only have fake success.
yeah,
That's all that's
yeah,
left.
yeah.
That's all that's
Okay,
left. You know what I'm
I
saying?
got you. Okay.
Okay.
We on one. We on one now. So basically, people okay with the bullshit.
Yeah.
Okay. So those that are okay with the bullshit, if you don't understand how to really navigate the bullshit, I'm gonna buy your bullshit for a decreased price point, and I'm going to love it. We're going to love it. We are because why? You in love with the bullshit, not reality. The bullshit. Am I off? Am I tripping, Cliff?
no,
What's up?
nah. That no, you that's it. Because
Yes, sir.
the market, the S&P, I've been saying to buy for a long time, right?
Yes, you have. Yes, you
I
have.
bought more. The reason the stock market has nowhere to go but up. It
Yes.
has to. You already said why. Because they can't stop printing. And
Okay.
where do prices go when they print up?
Right. Yeah. Every time.
Housing is going to go up. So what's going to happen? Like you said, it's an 8% interest rate. Nobody can buy a house right now, right?
Right. That's right.
How long can the economy go with nobody buying a house?
Not long at all.
So when we start feeling pain, what are they going to do? Cut.
Mm-hmm. Yes, they are. But here's the big thing about it is they're going to cut. But the thing about it is, and you're going to see in a second, now, guys, because the interest rates are higher, which means the cost of capital is up, right? And so if
Mhm.
cost of capital is up, it's costing more for someone to borrow the same amount of dollars to buy the same house. So therefore, you have
Right.
new construction has damn near almost stopped. There's no 1031 exchanges going on because no one wants to sell and go to a high interest rate. There ain't no refinances going on at all. Cliff has a licensed appraiser. Are there any refinances going on?
No, no,
Okay.
no.
Are there any 1031 exchanges going on?
The market's down like 50%.
Yeah. So it's just this here. I'm dealing with reality. People want to debate. I said we're dealing with reality. People wanted to debate the bullshit, and I'm like, now we understand the bullshit, which is the fake success, but we have to look at now reality because it's finna get real. If you don't believe me, watch this, guys. Here, guys, did you guys know that new construction home builder they're lowering their prices now? But they've been doing it for a while, but now it's beginning to show. That clip. Let's look at what's going on here, guys. This is a quick short video of them lowering, all right, them lowering their price points. Let me go and do it like this here, Cliff, so he can see us both. Here we go. Let's do this. So here we go. Let's see what's going down. Here we go. Boom.
Across America are now cutting the price on homes. The median sale price for a newly built home is down 15% from its peak 6 to 9 months ago. The reason the builders are cutting the prices is because they're building these new communities like the one behind me, and they're not selling at the original list price. Take a look at this. You can see all the homes that are currently being built here are listed as available. There are no buyers for them at the list price of $350,000 to $380,000. Why is that? Well, it's because we're in the beginning stages of a recession. It's because mortgage rates are back to 7%. So these builders are having to now cut the price in order to get the buyers back into the market, and it's working in some cases. People respond to price cuts. The builders are ahead of the curve on cutting the price, whereas regular homeowners are still delusional. Regular homeowners are not cutting the price, builders are. Eventually, as more and more of these communities get built, the entire housing market is going to follow the builders, so expect more price declines in the second half of 2023.
Wow. So Cliff, man, what do you think about that? But as a licensed appraiser, are you seeing the same trend when you go out into the market?
Yeah, I'm already seeing it. I already had a bank come back to me on an appraisal for a new construction, and it did, I had to do the appraisal. I did an appraisal on a new construction property. It did not match contract price.
Wow.
I
By how
had
much? By how much?
about 15, 20, something like that.
Ooh.
Yeah.
Wow. So what was the what how did it end up? Did they move forward to buy it, or what actually happened there?
I don't know. So once I turn it in, I don't know what they do with title and all
Ah,
that if they close.
gotcha.
Yeah, but I could see it in the market. The new construction, they can't sell at a premium. Ain't nobody buying right
Mm,
now.
Jesus, man, that is. We see it now. I'm seeing a lot of builders. Some of them are selling the properties to companies now, and then the
Mm.
companies are then leasing them out. We're talking about properties at 700,000 and above.
Oh, dang.
I
Wow.
mean, and this is in Texas, guys, because they're having to sell it at a little bit of a price point, and they're trying to give incentives. Now, you'll see a lot of the home builders say, "Hey, 4.5% interest rate. We will pay 20,000 in closing costs." One property that my wife looked at because we were house shopping is we looked at a house 1.9 million was the purchase price, new
Mm.
construction, grand homes, right? But they've been on the market for a while. We're like, what's going on? Well, someone overbuilt the property. He overbuilt it. Someone from New York,
Right.
and at the last minute, he backed out of the deal. So now they got a property that's sitting there just chilling. So we went in and we said, okay, guys, are you willing to negotiate? They said no. I said, so keep sitting on it. Keep sitting on it because I ain't gonna touch it. Why? Because I know I don't gotta touch it. I don't have to touch it. I don't gotta touch it. So that's what's going on, guys, man. What else are you seeing in the market, Cliff, when it comes to let's look at the price point of 300,000 and below. Are those properties selling?
Oh yeah, those properties still move
Now, why are those moving versus the higher tier one?
because the price point is even at a high interest rate, the payment is still reasonable.
It is.
I mean, so that that's the point. Like people want I would say that right now 400,000, 500. So let's say 450.
Mm-hmm.
That's kind of the line.
Mm-hmm.
Once you
Mm.
crack over about 450, them houses ain't really moving. The days on
Yeah.
market. Now I'll tell you something I'm seeing consistently.
Mm-hmm.
Difference between list price and sale
Yeah.
price.
Yeah.
All
Yeah.
every month over month they're going up. Everybody's listing for higher, but getting less or
Yes.
the same.
Yes. Yes. And Leo Range Rover, brother, thanks for coming to live on Instagram. This is a live. We're live streaming on all platforms, so we do see the comments as well. But also, we have other comments on other platforms as well. So we are seeing your comment, which is fine. As far as coming on the live, this is not like a typical IG live to where we can invite you up. It's a live stream, and so you're welcome to DM us, and we can kind of reason and reason talk a little bit. And if it makes some sense, you can come on to our show. No problem. Next Friday or the Friday after that. No problem with it at all. So this is a real estate training live. So guys, let's walk into this Cliff, man. With the higher interest rates, 8% now. New home builders lowering their price because they got to. selling to companies and then leasing out. And some builders are even leasing 25% of the inventory out too, because they can and they have to. And I ran into a property right now that was a new construction property that was actually abandoned. It was abandoned. And so I reached out to one of the builders. They said, no, the builder, the home buyer wants to finish it. And I'm like, so why'd you stop? Well, they're going to continue. I said, well, I'm watching, because if not, I'm going to come in and buy this boy. And so what they were trying to protect their check. And I'm like, I'll still use you guys if it makes some sense, but still. But anyways, here's my thing: is whenever you have this kind of variables kind of all over the place when it comes to the economy, one thing that I see when it comes to this is opportunity. Do you see the exact same thing?
Oh yeah, right. It's still because no one's from me. This is what I'm thinking. Everybody sees the interest rates and they're fixing it on the interest rates. But
Mm-hmm.
if you're an investor, you're looking at a year, 2, 3 years down the line.
Yeah,
So you can buy cheap today at a price point that you couldn't a long time ago.
yeah.
And if you can play the long game in a year, 2, 3 years, you're gonna be able to be at an interest rate.
Mm.
I'm thinking you're probably gonna be at 5, 6% for investments, and
Yes,
it's gonna be about 4 or 5%.
that's correct. You're spot on. You were spot on this one, guys. So that being stated, Cliff, we did something this week, didn't we? A little bit. Now, we do a lot, but we did something a little bit in an area that most people kind of run from, but we ran too, right? We did something, man. Let's show people what we did, guys, man. Do we have a contract on a 36 unit apartment complex in the we ain't gonna tell you the city because we're still doing what we do. Did we get a property at this price point? At a good price point? Really, well below wholesale. I mean, it's
Oh yeah,
scary below wholesale.
yeah.
Scary.
Still,
So
still working on it, but yeah, apartment
yeah.
complex beast. I mean, just good opportunity.
Cliff, give them a little bit of the numbers real fast, brother.
Oh man, numbers are crazy. So it's we purchasing, you know, let's say about around 150K, and probably gonna end up spending maybe 600K in renovations.
Yeah.
ARV is probably around 1.8.
Ah, what you say, what you say, what you say with your chest, though, with your chest. How much is the ARV?
1.8 million.
So we're getting it for 150, right? Really
Hmm.
between 130 and 150, which is fine. Put about 600K into it, right? What's the average rents, man, for this 36 unit? What's the average rents, man?
Probably get 725 a unit,
Cap rate?
9%.
Ooh. So ARV 1.8 mil. That's some juicy numbers, right?
Oh yeah,
Guys, we said that, guys. And also, don't we have another thing we do out there? Because we buying not just apartment complex, we buying also SFR, single family residences, right?
right.
Are we looking at about 3, 4, 5 properties at a price point of about $18,000?
Yeah. So I got one at 25. I'm trying to get that closed out. I got another one at 35. He just before we got on, he just countered me back at 35. So we can close it right. This is a property that we've already had a bid go out. So we already got the basic bid. So we already have basic our numbers, but that's a couple of them right there, and I'm moving slow. So
And we taking our time. I mean, we
yeah,
can really
oh yeah,
move very quickly, but we see that there's more downturn coming. So we're aggressive, but aggressive from a wise perspective, right? And so, man, it's guys. Most individuals when they hear this type of news about new home builders lowering their price points, interest rates going up, the economy kind of shambles, and inflation going up still, guys. A lot of individuals that are really governed by their emotions get really afraid, worried. But those that actually have good, wise counsel around them, good training as well, access to cash or capital, so to speak, which is fine, and they actually have the wise counsel to actually help them when it comes to a type of solution, man, we licking our chops. Licking our chops. And we're talking about those that we're looking at, guys, for new construction, whole subdivisions, right? Developing land, apartment complexes. We've kind of backed off from the office space because my office space is that's so terrible right now. That's 36, 48 months worth of inventory on the market. So that's crazy. And a lot of apartment complex from anywhere from 36 units and above. So guys, there's opportunities out there. That right there, guys, is called joint venture investing. So when me and Cliff and also Jason go out and look at these properties, and James' case as well, we have a team of individuals, and I guarantee you, my team better than your team. And I say that humbly because we've invested 25 plus years in this game. All right, Cliff?
Yeah, we been out in a minute, man.
Minute.
And don't get twisted, man. Dale being real humble. He working on something big,
Oh
some
man,
it's going
uh,
game changer. So yeah,
man, I am, guys. I'm waiting for it to close, and once it close, I'll come out and pop my collar a little bit. I'll do that a little bit, guys. And not just say look at me. It was look at the opportunities that we have created for other people. See, me and Clifford's vision, guys, for real estate investing is there's a lot of individuals in real estate that have a desire to be in real estate investing. They see the flip my houses. They see all these commercials coming on social media, even on TV as well, also. But people lack the wisdom and the wise counsel to know how to actually get to do it. And that's okay. That's fine. That's why we're here. So what if we taught you how to locate, guys, a distressed property, whether it be SFR, single family residences, begin to know these acronyms. All right. They have good as is and ARV values. You can get it below wholesale, apartment complexes, and in the right circumstances, a commercial property. Right? What if you had a team that could tell you how to structure it, how to negotiate it, how to put it on the contract, how to locate them, right? And get you the cash to do it. And you actually hold the senior position in the partnership. In some cases, depending on the deal. So you have a licensed appraiser, a GC, a transaction coordinator, and a venture capital and private equity guy who's bringing the capital to the table. That's a pretty good deal. Would you agree, Cliff?
oh yeah, that's all day. That's why we got the cash flow course. So we got man, this is an opportunity. Hop on that to where you can start submitting deals, show you how to find them, where they at, what you need to do, what you need to say.
Mm-hmm.
Because once you get it down, it's a system. It's rinse repeat.
That's all it is. It's just rinse and repeat, guys. This is the Cash Flow Club, guys. We get asked all the time, how can they learn about real estate? This is one way you can get it done. Now, and that's just $99, just $99, guys. You get all the training, subject to investing, how to buy and how to locate and buy your property in 90 days. How to put together a power team. Most investors lose it at the closing table. They lose it because they don't know how to read a HUD. They don't know how to pick a title company, and title companies can be a bear. They are a bear because there's dumb ones out there. How to locate distressed properties? There's one way, guys, that we walk into to where you can actually CityX has a list of properties that they want to get rid of because these properties haven't paid fines. We tell you how to locate those properties in your
Hmm.
town. In your town, one phone call, you get it. So most time that list is free, or you pay a little bit of a small fee. That's it. It sends right over to you. Simple. Let me tell you how to market to those homeowners. Right. We also have another. I'm gonna drop a course later this month talking about how to locate distressed properties by marketing to distressed owners. Uh-oh. That's another way as well, guys. But Cliff, man, you want to say anything, man, before we get off, man?
No, man, but you kind of took what I was saying, man. That's phase two. I'm getting
Mm,
that rolling too. We're getting entry because we would have had a couple other deals, but the contractor's got to be in that spot to be able to make that
yeah.
happen. So that's what found me another one.
Yeah.
So got him on board. So you got to build a team, and a
Yes.
contractor's got to be an important part of that team. You find you a good contractor.
Yeah.
I mean, that's when you can
Oh,
start rolling,
it's over
right?
then.
So, oh
It's
yeah,
over there. It's over there. And most guys out here selling courses. We ain't saying this ain't no course. This ain't no course. We get asked all the time, can you train us? Well, I could say, well, what if I actually trained you on demand? Whoa, this is how you get trained on demand. And what happens is I can also whenever we interact, let's bring a deal. Let's train one-on-one while looking at a deal, while we getting the bag. If that makes sense, man. Let's get the bag. Let's get the diploma. Okay, let's get the diploma while we're learning at the exact same time. Most individuals just want you to buy their course, and they ain't bought not one property. Guys, we own over $35 million worth of real estate. We good. We Gucci. We Gucci. You know what I'm saying? We're just trying to help everybody else out concerning real estate as well, guys. And we are intermingling private equity, venture capital into real estate, right? That's why we love joint venture investing, because that combines those two. All right. So I know for a fact when I first got into real estate, Cliff, I was trying to find money to buy properties. With us, the money's there. So let's teach you how to find the deal and have you put it together. Right. Let's get the bag. But guys, that's all I have for today, man. Cliff, man, you want to say anything, man, before we log off, big dog?
Nah, that's it, man. Catch us every week. Come back, man. Get the course, man. Sign up so we can get ahead and do something, man. We got a lot of things we're trying to get done. Join the crew. You know what I mean? Hop in. Join what we doing. We trying to do something special. That's why y'all see us out here every week, because we grinding. We trying to make something happen. So just be a part of it. See if you can figure out, if we can help you figure out what you're trying to do.
Yeah.
Take it from there, man.
Yeah. And guys, I'll say this here. A good friend of mine, before I go there, we've been asked, can we do the free master class again? It is coming soon, guys. School just started for the girls, you know what I'm talking about? And so that first 2 or 3 weeks of school is kind of touch and go. So we're looking at probably end of August, early September, we'll do a free master class, guys, which would be fine, which will graduate over to other things as well also. So we putting stuff together for you guys to where it is a system, and we're looking at putting something together to where we can have a master class live on location. Because we've been asked, could we actually do a conference? And I'm like, whew, let me see. So that's what's going on. So guys, the free master class, guys, is coming soon. Last time we did it, guys, we did virtually little to no marketing at all. What happened, guys, was we had a full classroom. This time, guys, we're gonna give it 24 hours for our followers, and it's free. Doesn't cost you no money to sign up for it, guys. And then we're mass marketing for it. It's gonna be a select amount of seats available, because we want to make sure that we actually honor everybody's time. All right, guys. But man, that's all I have for today, man. Cliff, want to say anything, man, before we log off, big dog?
Nah, I'm good, man.
But guys, man, you know how we end it every single time, man. Don't get mad at me because I look better than you. Before you leave, and while you can, you see that thing with me and Cliff, man, take that damn picture, give it to your mama there. I say, well, your chest, man, and holler at your partners, man. See y'all next week. Peace.
God give thanks. Bless God, give thanks. Bless God, give thanks. Bless God, give thanks. Big God, big grace. Big God.